Hey there traders, this is Shane, and this video here is going to cover trading the Euro US dollar from last week. Now this trade is actually still going on. Something I don't generally do is hold trades over the weekend, but this trade actually got triggered in late in the week, and it was on the books for a couple of days before it got triggered in. I did use a lower risk percentage simply because of the way the markets have been lately. You know, if you look at the markets every single day, you know that we're in a pretty volatile area where, you know, markets are spiking all over the map, and you can just see it here by looking at the Euro US dollar. Like, look, you know, there's wicks and shadow, whatever you want to call them, you know, wicks, shadows, whatever people want to call them, all over the map on this on this chart. And this is a daily chart, so that tells you one thing, right? And you can see this is a range on the Euro US dollar. Obviously, there's some intraday and some swing type of trades it could take on lower time frames. But this is where I want to focus in right here. Now, on let me just get something here. There we go. This green line is going to represent the area where the buy was at, and this is actually where the stop is now. This is where the area I would have liked to have taken my full profit, and as you can see on the Friday, we came pretty close to that area. It didn't quite make it, but that's what happens in the market. So I just wanted to give you a bit of an overview of where we are and where I went into this trade. You can see it down at the bottoms here is where I wanted to go long, did so. And I like this area. You know, we definitely have an area where price has been rejected up here. This has been sloping up. I just liked this area where price had rallied out of it. So in this area here, for me, was a good chance to take a buy if it came into play, and it did. Now the order was sitting in my broker platform for about 2 days before it got triggered in. Okay, so let's go down to a lower time frame and take a look. Okay, let's get something here. Here we go. So over here is the area that I had been looking at for when price was to return to this area. Now, the reason I like this area, if you just look here, this nice bunch of activity here, and then we get a strong move out after this little fake down forward, fake down below this range, and it moved up pretty strong. The only problem is, you know, price has been kind of meandering around this area, but it's this move out that I was a fan of. You know, when you look at these big moves in the market, you know, zero in on these in your own trading as well, because they do tell a story. Now, I like to play these certain ways. I like to either fade the move to fill this up here, and I think in the other video you saw that I made. And sometimes when price comes back in, take the move out. It really depends. It's all contextual, right? I can't say this is, you know, A, B, C. It doesn't work that way. And in this video here, I'm going to show you that I did make a mistake, and if I would have been around throughout the day on Friday, I would have done some things different. Now, what happened was on Friday I had some appointments, so I did take some action on this trade where I took some profit out of the market, moved my stop to make some money if it did stop me out. All right, but there were some heads up throughout the day that were kind of pointing that if I would have been around to close the trade. And there's also a price point I'm going to point out as well. Okay, so this is the area I liked. All right, now if you look in this area right here, this is where the trigger in happened, and you probably see this little spike below this area. Now the good thing is, just because you see these areas, you don't put your stop right below them or right on the tip of these. That's just you're just asking to be stopped out, and you know, price does gravitate to where the orders are. So I was actually very fortunate I didn't get taken out in this trade. But going along at 42.97, I wrote these down on a 30-minute. There we go. Well, whatever. 42.97, and the stop was at 42.54. This came down to a low of 8, I believe. Yeah, well, actually 56. Was it 56? Wow. So 42.54. So I was looking at 43 pip risk. I was looking up here where this move here had happened at 44.75 from ultimate target. You can see here, got kind of close, didn't quite get that extra shove up. 178 pip profit is what I was looking for. So a 4-to-1 risk to reward ratio. This number here, you know, you have to Your position sizing is really going to depend on a few things, stop and what percentage you're going to risk on each trade. This for me was it's pretty high, but whatever. And it was actually a lower risk percentage anyway, so position size was a little smaller than I usually do. And let me just show you here on the screen here, this chart. This is where the order was actually put into the market. This is where the order got taken into the market. This, that spike down I had shown you on the third chart. Okay, and up here is where some action was taken on the trade. Here is where the stop is right now. So we've got a bit of room here, about 20 odd pips, I guess, to my stop out. I'm going to talk about this area right here in the video, and this area here as well. Okay, so price actually gets taken in. This is about 5:30, not about 5:30. Yeah, it's about actually. Get this big move starting to happen around 7 o'clock, 7:30 Eastern Standard Time, and this is where I'm into the market looking around, and around this area right here. This is where I took the scale out. You saw in the other chart, which is the brokerage platform chart. So is this. This is MetaTrader. The other one was the built-in platform charting package with Oanda, which I don't trade off that particular charting package. Anyway, so scale for 96 pips. Now the stop placement was here for a reason. I just want to show you technically why that is here. It's simply just using a downward sloping trend line. Now this was put in, before I had left for the day on Friday. So the I was looking at this area right here. Right, this had not happened. Okay, so this is where the stop is right now. So worst case scenario, 53 pips will be coming out of the market if I get stopped out. Now, what I want to point out is this area up here. This area right here was what I was looking for. What I was thinking, my plan was this. My plan was to have the market come up to this area right here. Right here. Let's see if I can just draw a line here. And in these kind of areas, you always know that there's some orders in this area. Now this is before I'm going to show you what the news had come out with, the market updates had come up with. I knew there was going to be some orders in this area. What I was looking to happen was a punch up through it and take out the stops. Right? If you're going to go short, you're looking to buy to get out. So I was hoping that people got triggered in, and then price would shot up into here, and that would have been my area to exit. As you can clearly see, it's still in the market. Well, that didn't happen. Didn't happen. Now, if I had been around, I would have noticed a few things. Let me just bring this out for you here. So this is what I'd gotten when I had returned home. I had seen this. The euro-dollar spiking higher, stocks improve. On the Thursday's peak around 44.50. Offers seen ahead of that level, right? So there was orders to buy the market, sell the market in this area right here, which I had already known that there'd be orders in this area. What I wanted to see was the spike up, take them out, fill the orders that are sitting up in this area, and drop down. Why? Because the big drop from this area right here. We know there's some strong orders in this area, right? This was updated. This is updated during the day. So stocks were doing pretty decent. The euro was spiking higher to 10.13. I'm already gone. The eyes on the Thursday's peak, right? Offers seeing that level. So what does that tell you? Euro's going up, right? That's what I want to see. I want the euro to keep going up. At 10.21, what comes across the wire? This. Euro-dollar traders report solid offers around 44.50. The euro peaks at 44.53, so it pokes up just a little bit, not high enough to trigger the stops, and now since edged lower. All right, seeing this, right, and the peak and not busting up would have told me to get out, and this would have been a market out. Close my position up here. All right, I wasn't around. Let's see what else we get. Here we go. This is at 12.59. We get this. Let's bring this up here so you can see it. Limited flows in early afternoon dealings. The euro was holding around 44.05 and losing its sensitivity to stocks. So obviously there's a big drop. Limited flows in early afternoon dealings. Not only is it August, it's Friday afternoon. Limited flows. What would be the chances at 12:59 that we would see a spike higher in the euro US dollar? Pretty slim to none, right? I wouldn't have bet my house on that one, that's for sure. And finally, the last one I see is this. Euro dollar holds 43.85 in afternoon dealings, relatively firm and largely non-responsive and to the dip, blah, 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 blah. Nearby support, 43.60. All right, so let's see where 43.60 is. So up here is they were saying there's going to be some support at 43.60. So using that from Friday, my stop's in a pretty decent area. All right, so what is the purpose of this video? The purpose of the video is not to dazzle you with, trading. The purpose is just to show you that in these kind of levels up here, when you see these areas where these prices have rocketed from, when you see swing levels, there's a good chance that you're not the only one that has seen those swing levels. So what do traders love to do? Short upon the return, right? And that's exactly what happens here. Does it always happen? No, it doesn't always happen. But just know that many, many times when price is approaching one of these pivot areas, especially like this, right? There's going to be some orders up there. And what also confirmed that was the market update throughout the day. I also want to point out that when you're thinking, well, where am I going to put my stop? One good way to decide where to put your stop is to use, some sort of technical, be it a trend line or a like this, or a horizontal support and resistance level. Some people might use a moving average. I don't. I'd rather use something different. You use a market structure or something along the lines of this, which I know people are looking at, right? If I can see it, other people can see it as well. And trend lines are, they're used worldwide. I also want to point out that even though we're in some pretty volatile markets and there's a lot of money to be made when you catch some really good moves, there's also the flip side of that. You can see these spikes over here. The spike is at noon right here. Boom. These moves down. It's a dangerous time to be trading. And what else do I want to take from this? These areas, they're very, very important areas. If you look at your chart like this, what areas stand out at you? What areas are you looking at right now? And I'm hoping you're saying, well, this area stands out. Certainly does, right? This area certainly does. This area does as well, even though it's going far in the past. This area kind of a little bit, right? See, it's firing up, right? It's not taking its sweet time getting up there. It's it's moving, right? What else? This is just a big messy area right here. But these areas, they mean something. And sometimes this is just a simple bar chart, you see it even better, right? These areas really punch out at you saying, hey, look at me, look at me. They're good to take trades off of. And also, it never hurts to reevaluate the risk that you're taking in on trades either. So that's pretty much what I wanted to cover. When you put these kind of videos together, I don't want to just put videos together just to show you, hey, look what I did, because who cares what I did, right? Doesn't mean anything to you. But if something can come across, that's where the gold is, right? That's where the good stuff happens. Just know these areas, there's meaning to these areas, all right? There's meaning to this area. The spike down, what do you think happened, right? A lot of people have their stops just below this area right here, right? Definitely. Then you really can't deny that. A lot of people do that, right? That's pretty ugly, that line. But look what happened. A lot of people like to play these bounces, right? You see this area right here. Market comes down, bounces up. People go, oh, look, a swing level. Let's put a stop to buy, right? In order to buy. Put our stop just below that. Look what happens. Market comes up, comes down, triggers them in, runs the stops out. And how far did that go down? Let's just measure that. It went down, about 11, 12 pips, right? 10, 11 pips. But that wasn't the area I was looking at. This was the area I was looking at. So, what do all the books say and all the gurus? What do they say? Well, when you're buying off a area like this, just put your stop just below this area. Well, this is what happens. You're not the only one that's doing that. So when you're taking a trade like that, or you're looking at where you can put your stop, just take a look. Okay, well, I can put this there, or I can put this here. You see what I'm saying? Now, don't get ridiculous and say, well, I can put this one or this one, right? But this is pretty much a local low to this, right? No reason why you couldn't use that. And for me, I put about 5 in spread. That's what I use for my stop. If price was going to break through this area right here, I was prepared just to get out of this trade. So anyways, let's wrap this trade up, this video up. Hope you picked up something from it. Thanks for watching.